Now class, we are going to start with chapter number 10, inheritance tax. This chapter is very important. The first question, which usually comes to be of 35 marks, is basically of the CGT and IHT. Now class, inheritance tax. What is inheritance tax? Like class, you know that people die or give gifts during the lifetime. Then on those lifetime gifts and whatever is given on death comes under the scope of inheritance tax. Now class, inheritance tax, for applicability of inheritance tax, there are basically the essentials. The essentials are, first of all, there should be a transfer of value. There should be a transfer of value. It means there should be a loss to the person, state, chargeable property. For IHT, as such, not even a single asset is exempt. Mark my words class, under CGT there are lot of assets which are exempt, but under IHT not even a single asset which is exempt. Okay, and the persons on which it is applicable are the individuals. IHT is not applicable on the company, it is only applicable on individuals. Right class? So essentials are, there should be a transfer of value. Okay, there should be a transfer of chargeable property, and the persons who are chargeable are individuals. Now class, occasions of charge. Class, before discussing this, I am going to tell you the types of gifts under IHT. Just look here class. Types of gifts under inheritance tax. There are basically three types of transfers under IHT. It is interspouse, pet, and CLT. Interspouse transfer means class, husband to wife, wife to husband, or civil partner to civil partner. So class, if there is any transfer, from husband to wife, from wife to husband, from civil partner to civil partner, then it is exempt under the IHT purposes, whether the gift is given in lifetime or it is given under death state. So remember, if anything is left for spouse or given to spouse, whether during lifetime or in the death state, is always exempt. Always exempt. Right class? Now, pet. Pet is, the full form of pet is potentially exempt transfer. It means a transfer from individual to individual other than spouse. If one person is giving a gift to another person, that can be any person. It can be a friend, brother, sister, children, grandchildren, uncle, aunt, any person other than spouse. If any gift is given, then it is exempt during lifetime. During lifetime of donor, it is exempt. It means the person who is giving the gift is called as donor. The person who is receiving the gift is called as donee. So class, during lifetime of the gift, okay, if the donor is alive, then in that case the gift is exempt. But if donor dies within a period of 7 years from the date of making the gift, dies within a period of 7 years from the date of making of the gift, then gift is going to be chargeable. I just give you an example. Suppose father gave son a property to son on 1st May 2016, right? Now, at the time of gift class, it is exempt because it is a potentially exempt transfer individual to individual. Now, class, if father remains alive, if father remains alive till 1/5/23, then gift will be exempt forever. Okay, it is not going to be taxable after this date. So if the donor from the date of making the gift remains alive for a period of 7 years, then in that case, class, gift is going to be exempt. But if father dies dies before 1/5/23, because from the date of gift to the date of death the period is less than 7 years, then in that case, class, IHT is going to be payable. Now you will ask me, ma'am, who is going to pay? Who has received the gift? Son has received the gift, class. So who is going to pay? If son has received the gift, then who is going to pay? Obviously, the son is going to pay, and on death date, the CT rate is 40%. Right? Yes, class. Now, CLT. CLT is if individual has given any gift to trust. If individual has given any gift to trust, and I am telling you all these lifetime gifts, these are all lifetime gifts. Individual has left anything to trust during his lifetime, then if you are leaving anything for the trust, it is called as chargeable lifetime transfer. Chargeable lifetime transfer. Right, class? Because it is a CLT, the name is chargeable. C for chargeable, lifetime transfer. In that case, class, in that case, it is going to be taxable at the same time also when the gift is being given, and the rate is going to be 20% or 25% depending upon who is paying IHT. Okay, if donor is paying IHT, then in that donee is paying IHT, then 20. If donor is paying, then 25. Right, class? So, if the individual has given anything to trust, has gifted anything to trust, at the same moment it is going to be taxable. The rate of taxes, if payable by donor, 25, if payable by donee, 20, plus if donor dies within a 7 years time,